I seriously cannot believe that we're coming to you today with our market update for July. It has just absolutely flown by this year, hasn't it?
It's crazy, man. Like, after last year being so weird, and then we're in July now. Like, what's going on?
Seriously, it's crazy. So we've got some information here we're going to break down from CBA, CoreLogic, Michael Matusik, SQM, HTW, and some other guys that we've been following over the last month. Yeah, really interesting change in the way people have been buying properties now, hey?
Yeah, like, I've been talking to mates in Sydney, and I've seen prices in some suburbs go up 10% in the last 12 weeks, like literally that hot. And then in Brisbane and the Sunshine Coast, it was really, really hot for 6 months, and now it's settling down a little bit, and people are buying properties at good, reasonable prices again. So it's very exciting, but very different in parts of Australia.
Yeah, that's what I've sort of found that's been the case the whole year. Hey, it's just been like real pockety. That's probably the wrong word.
People are just so open to speculating right now. It's like, where's making the money? Rush in. Where's making the money? Rush in. Where we like fundamentals.
Yeah.
We like markets that haven't performed in the last 10 years. So for the next 10, they can do better versus Sydney's on a bit of a hot streak at the moment. Let's just go spend some money type vibe.
That FOMO's just, it seems scary for me.
Be careful of it.
Yeah, for sure. But I think that could be a change of what we recently found is that the number of owner-occupiers has sort of decreased a little bit and the number of investors has dramatically increased recently. So with that, obviously owner-occupiers buy with a hell of a lot more emotion than investors do. So they'll just jump straight into any old market that's going wild because they've got to get in.
Yeah.
But then you got your investors that are probably going to be a bit more logical, maybe don't want to spend $1 million on an investment and, just are going to look for those little hidden gems.
The average convo I have with a client is, hey, Ben, I can probably borrow $400K to a couple of mil, but I don't want to spend it all and I want to be strategic. So, like, we work with investors every day, and, I've bought a couple of properties recently myself. Like, I definitely feel like it's one of those times where you don't have to spend 50 or 100 grand more like you did 6 months ago. Like, you can be very strategic and get good quality stuff, probably from now until about November. And then I think, just with summertime, it always heats up as people think about moving before Christmas again.
Yeah, exactly. But I can't read a word that you've written down on that piece of paper with CBA. So why don't we let you run through the top part on CBA there?
I should have been a doctor, man, because I can't even read most of this stuff. It's like, Jesus, man. No, but in all honesty, I can hardly read it. No, so the number one thing, and I think the most important piece of information we've heard in June, July this year is, according to CBA, and these guys don't write this stuff unless they expect it to, happen, interest rates are expected to rise earlier.
Yeah.
So the government's been saying for a couple of years now, or a year and a half, that they won't increase the cash rate
until 2024.
But now CBA is saying as early as November 2022, we could start to see an increase. Now, that's important because a lot of us are sitting at interest-only rates at the moment of 2 to 3%.
Yeah.
Or I'm getting stitched up on a few above 3%. But for most of you, that aren't a pain in your ass to your broker, you should be on pretty good rates. Now, as they start to increase the cash rate, now the cash rate is the money that the banks borrow, and then the bank puts their profit margin on top. So,
of course,
at the moment, the cash rate's at 0.25%, and the banks can lend at 2 to 3% and make a hell of a lot of profit, like record profits right now. But if the cash rate increases to 1.2, the banks can keep them at 2 to 3%, but most likely they're going to jump them from about 3 to 4%. Now, that's okay, but if you're sitting on a lot of debt right now, it's just important to start being aware of this and getting in a safe position.
Yeah, if you're holding $1 million worth of debt right now and you get that 2% interest rate increase, that's going to be a hell of a lot of an increase on your monthly mortgage repayment.
What's 20 grand a year, $400 a week? It's a significant increase. So all we would say is people who are always watching what's coming is just be aware of that.
Yeah, be prepared that it's coming.
And so on top of that, CBA and CoreLogic have both said that people are naturally starting to fix some of their loans because There's fixed interest rates. I know one of the boys internally just got one at 2.1% for 3 years. You've got some insane rates.
I got mine, which I wish I kind of went for 3 years, but I had the option to go for 3 years, but at the time I wasn't sure what was happening here, but I fixed it for 2 years, which comes off at the beginning of 2023. Both of my investments, interest only 2.49.
Insane, man.
So that'll give me a good chance. I know before that, like when that comes off the fixed interest rate, I'm probably going to have to increase. So at the moment, just kind of preparing to plan for that.
Yeah, it's just one of those things. More people are starting to go out there and do that as a result because, people like us are sharing that info, same with CBA. I think another thing that's super, super important that you mentioned off the CBA update is we're in a chronically undersupplied labour market.
Yeah.
Now, I thought that Australia would have an issue like most people did. The CBA did as well. We had unemployment at about 15% last year, and in some industries up to 35-40%.
Now it's come back to about 5.1, which is lower than pre-COVID.
The government's trying to get to a point where unemployment's at 4%, which is even, pre-GFC, pre-COVID levels. What I didn't realise last year, though, is that 500,000 Australians, I thought the population growth rate in Australia last year was negative, which it should have been without the people coming home, but 500,000 Aussies from all around the world that were expats came home.
And most high income earners as well.
Massively high income earners on average came home, and as a result, that's why we're seeing such low vacancy rates according to SQM, and that's why we're seeing such an undersupply in the labour market as well. We're not able to grab the international talent that would normally come into the construction, the agricultural industries, the mining industries, and the financial. And so we're having real issues recruiting, particularly those senior level, high paying jobs at the moment, which is epic because more Aussies are going to get promoted and more Aussies are going to increase their wages as well.
It's pretty wild to see what's happened because obviously it's a pretty terrible year for a lot of people. Tourism, education, hospitality, these industries have been absolutely smashed, and you feel so sorry for them, but it's unfortunately, a lot of the people that work in those industries are non-skilled workers. Mm-hmm. So these guys that were, running the coffee machine at the local cafe or fruit picking or, running the scuba diving tour up in the Great Barrier Reef.
Which we supported last year, thanks guys.
They can't just come and start managing a team of 100 people for these big mining companies. They can't just go and start their own roofing company where there's a massive undersupply of trade people at the moment. So it's the undersupply of skilled people in general that we're really struggling with at the moment. So it'll be interesting to see once the vaccine's rolled out, once the international borders open up, how many people they're actually going to let in.
Man, I've looked at the numbers in the GFC with you before, and in the average year leading up to that, they might have let between 300,000 and 400,000 people in.
Yeah.
Or 250 to 400. In the 2 years after during the GFC, 1 year they let 500,000 in, another year they let 450,000 in. So I have a feel like Australia's solution to any issues is just more people. And, that was America's for 200 years and Europe's for 200 years before that. That's how economies and countries get great, with scale, and that's how they solve a lot of economic issues too, because everyone has to pay to come in.
Yeah.
And then when they come in, they all need somewhere to live. So it funds
somewhere to
multiple
work.
Industries.
Yeah. I hope that we can bloody irrigate the centre of Australia at some point so we can, spread out. But it's crazy. We're here on the sunny coast, and it's on the weekend I go for a little drive out to the bush, and it's just 20 minutes. No, it's the other weekend.
You could be past Talara here, and you could be looking at cows, man.
Well, remember when we were sitting at the top of Budrum I was having a coffee, you were having a tea, and we're looking over and we're like, there is still so much land available on the sunny coast. It's crazy.
That was good to see. One of the things that I just wanted to add on to that is, last year when we were freaking out like everyone else was, and we were looking at history to try and figure it out. Now, in COVID, the unemployment rate in Australia went to about 15%, but the unemployment rate for people with a TAFE diploma or university degree only went to about 7%. And, I looked back at the Great Depression as well, and I went, well, at that, I didn't. I just read someone who did, trying to claim it.
Who cares?
But I looked at the data then, and unemployment rates went up to about 15-16%. But at the same time, in the Great Depression, people with diplomas or university degrees, the worst it got for them was about 7.5%.
Yeah.
Now, it's important to recognise that statistics can be easily manipulated, and
The narrative as well.
the narrative as well. Like, unemployment at 15% feels like Armageddon.
Yeah.
But when you're,
And it is for people.
you know, like a lot of the people watching this, trying to improve your life, trying to get educated, trying to improve your skill set, these markets, and what I really want to give you is confidence moving forward, that if you're intelligent or working on like skills and you've got an okay education, or you have learnt the skills like the long way, like a specialist in something, like most of the time, even in horrible environments, you're going to be okay. And they've painted this history of the Great Depression, like 60% of people had no jobs and everyone was lining up for food stamps. But I can almost guarantee hospitality, tourism, the same industries that have got absolutely wiped at the moment are always going to be the ones that are wiped. And so also choosing industries that are less bumpy, more stable can give a lot more security as well.
Well, you just look at the major media outlets and what happens, you know, like I'm watching the news at the moment because everything's kind of a bit weird with a new little COVID outbreak, and it's just so scary when you turn on the news and I talk to people in Melbourne, I talk to people in Sydney every single day, and the feedback from people that are experiencing it is completely different to what you hear on the news. And it's the same as like when there's a cyclone up here in Queensland, people will call us and be like, "Oh, you guys all right? I saw like photos and videos of trees down and roofs off houses," and it's
in Mackay, 2,000 k's away.
Yeah. So it's just, you got to be really careful with the way that you interpret what you're listening to on the news, because you know they've got an agenda as well.
Without a doubt.
But that was really interesting. Now, moving on to some CoreLogic information. I couldn't believe this when we read it. In April, there was $31 billion loaned to Australians to buy property. $31 billion in 1 month.
I heard something a few years back that Commonwealth Bank was more profitable than Warren Buffett's bank at Berkshire Hathaway. And it was more profitable for 3 years running. And I went, whoa. That's when I actually started to sell a lot of properties and was freaking, because I'm like, the only reason it's profitable is because of massively irresponsible lending in Australia.
Yeah.
Thank God the government saw the writing on the wall for a crash too and stepped in hard. And, you know, how can Commonwealth Bank be
making that much money from the backs of us? That's how. But thanks for lending me money.
Thank you, yeah.
Another one was like just the percentages of where the finance is going. So owner-occupier loans to non-first timers was 49%. So it's sitting at a good level, similar to where it's
50-50 split. Oh, not even actually. It's more like, what is it between first timers and owner-occupiers? That's 70%.
Yeah.
75?
So exactly 70%. So first timers are 21.5. That's been decreasing. I think they said that was a 6 months straight that it's decreased. Yeah. So it is coming down, and makes sense. It's getting harder and harder for first timers to get into the market. In March, they ended the building grant as well. So
have they extended that or not? I don't know.
Extended it to September, but you can no longer access it unless it was pre 31st of March.
Okay, that's good to know.
Yeah, so obviously that naturally happens when there's incentive. First timers are going to jump in, makes it easier to get in. When there's not, it's trickier. You need bigger deposits. Property prices have gone up 8-point-something% around Australia over the last 12 months. So, you know, that's a lot of money for first timers to fork out.
Just to go on a thing there, like I was getting a poke bowl the other day, like from the local joint, and the chick there was 19. She'd just on the weekend bought her first place at Aura on the coast. She'd bought 114 or 41 square meters, and she was building a double-story home. And I'm like, good on you, but also, without these grants, like she would never have been able to access it. And also, that's like crazy, like that people like her even have just been able to figure out a way to get in.
Love it. Yeah. It's awesome, you know, like just getting your foot in the door is the hardest part. And if you can do it before 30, like, geez, that's awesome. Then investors have picked up to about 25.9%. So investor activity has been sitting real low compared to the averages, but slowly but surely it's increasing, which is awesome. So I think, you know, 6 months ago it was below 20%. Now we're starting to get up there again. Now, it's good to know that the decade average is actually just over 35%
So it's
investor
sitting
activities.
well below decade averages for investor activity, which I think is a good thing, because as that wave of investors come through, it's going to create another pickup in the next 5 years.
Exactly. So, all good looking things though. Another little interesting one was like 218 suburbs throughout Australia and now have a median house price of over $1 million. So, yeah, things are getting expensive in some parts, hey?
Yeah, I mean, like, it's crazy. And it's exciting for all those people that have got a amazing amount of wealth, and they'll be able to set their families off the back of that.
Yeah, exactly. Some other interesting info that we've been reading was from Michael Matusik. Now, he sends through really cool articles. It was kind of tough to break it down into a short, 30-second data point for a lot of them, but I'd 100% recommend going and subscribing to his emails. He puts out some pretty interesting information.
Different stuff.
He focuses quite heavily on Southeast Queensland. It's where he grew up. It's where he's from. So I think he lives down in Tassie now. But, really cool information. But one thing that he was writing about was job vacancies around Australia. Coming to the unemployment dropping and the undersupply of workers. There's 290,000 job vacancies in Australia at the moment, which is a lot, that's
a lot of opportunity for people to go pick up some work and stuff like that.
Yeah, so, there's options out there for the right people if you're willing to do it. Like, I was talking to a mate who's kind of just moved up here from the Gold Coast recently and kind of in that in-between phase, and he's just like, if you want work, it is so available at the moment. You can do anything, just finding some work.
Yeah, I mean, as long as you're not a pilot.
True that, yeah.
No,
I feel so sorry for that. Okay, cool. Then HTW as well. I like to read their updates every single month. It's just interesting to get all the different views from all of these different outlets. And, the most important thing is, for the second month in a row, every single market on that list in HTW for the residential houses was sitting somewhere between the start of recovery and the peak of the market, which, that just doesn't happen with those guys.
I've been looking at that report, I reckon, for 7 or 8 years now, and I've never seen it look like that. It's quite crazy, but every single market in Australia is recording growth at the moment.
Yeah.
One of the interesting things that Simon and I was looking at in the HTW report for this month was just when they looked at Brisbane, right, they were saying that there doesn't really seem to be any pockets within 15 k's of the city that haven't been found, like the hidden gems anymore.
Nailed it.
And I feel it. I've seen some of those suburbs within 10 k's of the city legitimately go up 400-500k this year.
Yeah.
And what I love is that suburbs almost next to them have only gone up in the same amount of time by 50k. All of Sydney, the tide has already risen that entire boat. Same with Melbourne. Everything's gone up by 60 to 80%. But there's parts of Brisbane that we look at right at the moment, which we'll talk about on camera in a couple of years' time, maybe. But, these parts of the city that are a little bit further away, 19 to 25 k's, or some of the beaches that haven't been looked at yet, some of them, when you look at the 12-year performance, it's been 1.5% per year. Jump a bit closer to the city, and your suburbs have done 6% in the same period of time. So that is extremely exciting to us.
Yeah, and coupling the information from Jeremy Shepherd recently as well, where he's looking at the 20-year performance, and basically what it's saying is if a market has performed really well over the last 10 years, the likelihood of that continuing is quite low. And the opposite is true as well. So areas that have underperformed for the last 10 years have a much higher likelihood of performing well over the next 10. So using that ripple effect, using that compound effect to your advantage can be really powerful, because what he also went in to say is that distance to the CBD doesn't actually impact the long-term performance very much. So you look at these areas within 15 k's of Brisbane right now, and they're super hot, they're super expensive, they're really hard to buy in, heaps of competition, but you can just look an extra 5, maybe 10 k's from the city and find these full-blown hidden gems that are still super affordable. The average days on market are longer, the DSR score is lower, and you've got so much more opportunity to find a better property at a more affordable price with less debt, higher rental yield, which over the next 10 years looks really awesome.
It's crazy, man. Like, that piece of information has completely changed the way that I invest.
Yeah.
And given me so much more confidence. So what he's saying, without looking at suburb by suburb level, on average, like, let's say like a Cronulla Beach in Sydney 20 years ago, you could have bought for 600K probably.
Yeah. 100%.
For a nice home. And you could have bought Penrith at the same time for 200K in Sydney 20 years ago.
Yeah.
Now, Penrith is worth 800K and Cronulla's worth 3 mil. Now, to the average punter, you'd go, well, Cronulla's smashed the performance. And I suppose if I was like looking at that gain, I'd be absolutely stoked with either of them. But what he found is that like the places closest to the city or the beaches will generally at the start of a cycle in Sydney or Melbourne or Brisbane go up first. And that makes sense because
it's literally happening. We're just explaining that in Brizzy.
But, you know, like over time, Penrith's average annual performance is going to be almost identical to Cronulla in terms of the average annual capital gains.
In the percentage.
As a percentile, yeah. And, you know, give or take 1%, which is freaking insane. And it gives me a lot of confidence now to look at places that may not be looked. And if you've missed inner city Brisbane, like most people have now.
Yeah, I missed it. I couldn't do it. I would have loved to. You know? Like 12 months ago, I was ideally looking to buy in a suburb called Stafford or Stafford Heights, but I couldn't get up to the servicing levels, unfortunately, and now I definitely can't.
600K to $1 million with a view in 6 months.
Yeah.
But, you know, knowing that these other suburbs, you know, you might be in the 15 to 25K ring now, or you might be right on the beach, but not on the beach that's gone nuts. But then in a few years' time, if you miss that, and some of us are going to miss it. Like, I've missed so many things. It's like you might be able to get into the 20 to 30K ring, and that might be acceptable because at that time, you know, the growth might not have got there yet.
And you can only do what you can do, right? Like,
Fully.
Unfortunately, you know, well, I definitely don't. I need to work with the banks to get finance. Most people do, and it's like, you can only do what you can do. So it's just about setting those expectations. Like, yeah, you would have loved to be able to buy in that 15-kilometre radius and be a part of that growth if you had have bought in the last 3 years. But if you haven't, it doesn't mean that you've missed the boat. It doesn't mean that there's no more opportunity out there. It just means that you've got to reset those expectations, re-educate yourself on other locations that still represent value and go out there and smash it.
You know, I think in the last 2 months, we've bought about 40-odd properties, Simon and I as a team. And what we've noticed, which is as important as this other stuff because it is really what's going on, is 2 months ago, we would put in 10 offers and only get 4 accepted. And at the time, prices were rising in some of these suburbs by as much as $20,000 a month. Now prices are stagnated or maybe slightly increasing. And if we put in 10 offers, we're buying 9 of them. So that should be the earliest indicator of things aren't selling as quickly. Like when agents start calling us from areas closer to the city or the beaches and go, hey, we've got another off market for you. Like I think Taylor, Simon's partner, has been finding about 40 to 60 of them a month at the moment for our clients. It's
massive.
Like, that's an early indicator that things have softened, which would traditionally happen at this time of the year anyway. But I feel like there's more time and less urgency than there was. So I want everyone to just take a full breath. You know, hopefully this update's given you some data points to consider and hopefully future ones do as well. But also just to know outside of Sydney, you know, things are pretty chill, even though they're going up and the averages are going up. Like I think Brisbane did 12% in the last 12 months according to CoreLogic. But I know suburbs in Brisbane that have done minus 3% in the same time. So it's like, don't look at the entire market, look at the pockets that have underperformed and then take advantage of them while you still can. If you're a buyer, and if not, like enjoy what you've already bought and just ride the next 5 years of the wave.
Yeah, for sure. But yeah, that's sort of your market update. Really appreciate you listening, guys. Hopefully there's been some nice little information parts here to play on. But you know, I like it. I love the look of things that I'm seeing at the moment. It's been a really, really positive 6 months and, you know, things are looking upwards as well. I guess the biggest takeaway from this video is the potential interest rate rise towards the back end of next year. Just be aware of it and, you know, start planning for those things because you don't want to be one of those people that gets caught out with too much debt that can't make those repayments and have to force sell a property. Like, that's just, I'd hate to see people do that.
Without a doubt. And just acknowledge that the media cycle is naturally going to turn from very bullish this year as this interest rate rise comes through,
Yep.
to very, very, very negative in the sense that it's going to spook people that it's over and we're going to get all these foreclosures and stuff. But the thing they're not talking about is the $141 billion that Australians have saved since the start of COVID. The fact that most people are ahead on their loans, that foreclosures...
500,000 people that moved back to Australia.
500,000 people, $300,000 of them with mad cash and good jobs. Like, there's a whole lot of good stuff going on, and there's a whole lot of scary stuff always as well. Just manage it and, you know, make sure you're setting that long-term intention and plan, but we appreciate it.
And keep watching the market updates. And you've got to subscribe to do that.
Yeah, so to do that, hit the subscribe button, give us a thumbs up, share this with someone who needs to see this sort of stuff that's thinking about the market, positive and negative at the moment, and come follow us on Instagram. Give us a, what is it on Facey? I don't even know anymore.
Like on Facey, follow on Insta.
Yeah, and check out the Pumped On Property Show podcast as well, where we do like much longer version content too. But we appreciate it, guys. Be safe and talk soon.
Sweaty. So sweaty. Oh, that's good.